All right. Good evening, everyone. Hope the voice is audible. Can anyone just ping and on the chat box if voice is audible enough? Yeah, perfect. So let's begin. Okay. I think we have already discussed 3 or 4 sessions we had. We understood the basic nomenclatures, what the P is, market capital, forward P's and everything. Then we had a session. We understood how to, check the profit and gain loss statement. What are the line items and which are very important line items as an investor should look. Then we did a balance sheet thing. Understood what are the, how the money comes into the company, promoters' money, owners' money, or the debt that we take, how the line items looks, what changes in the balance sheet happens that becomes a healthy balance sheet and all. We understood under the balance sheet what is the working capital, how the change in working capital can improve and the business turns around because of the working capital. Then we did something on the cash flow. We understood whatever the company does on the P&L front, whatever the sales happen on the P&L front or the profit, what end of the year company generates may not translate definitely into a cash. It may be that the money has been got stuck with the purchaser kind of. So uh, so I think now we also understood how this things speak to each other. So we understood how the impact of a sales makes an impact on the cash flow, how an impact of balance sheet has on the cash flow. Now probably is a time that we will understand what are the businesses that we should avoid, and also have a realistic check if what is a good business and a bad business, as in on the changes of balance sheet, on the cash flow and the P&L and everything. So we will take uh, 3 or 4 live examples, some old examples, few live example of what is happening in the industry. We will take some very old examples, some recent examples where the forensic was bad, where the promoter siphoned off the money, it took away the money from the investors, and how the minority shareholders. So today, when we invest into a company, we are the minority shareholders, and how the minority shareholders were cheated. Okay, so these are 3 or 4 things. Just one second. Okay. Okay, these are the few of the basic checks that I have written over here. So basically, what I'm trying to say over here is a company, or what you should not buy or avoid, or where are the chances that the promoter might be cheating, or the balance sheets are not in a good shape, basically. Okay. So when you see increase in RPT, means related party transactions. So I'll give you the meaning of related party transaction. Related party transaction means that today the owner of that particular company, or the promoters basically of that particular company, have have some another line of the business, or the company is engaged with uh, promoters different entity, or directly with the promoter. So for example, if company gives a loan to the promoter, then on the balance sheet or on the annual report it would be shown in a line item called as related party transactions. Okay, if I have a, a, a cousin of mine, or a colleague of mine, or any relative of mine are in the same line of business, and I am taking loan from them, or I am taking buying a raw material from them, or I have one more company, a promoter or a family of the promoter has the same uh, company in the same line item, and I am taking some kind of a raw material from them, or I am selling to them, or giving loan to them, or taking loan from them, or investing in their company for they doing CWIP or whatever whatnot. This all is basically covered into your related party transactions. Okay, so we will go how the related party transactions can be very very bad. There are companies who have cheated to the minority shareholder via related party transaction. They take away, I mean, they gave the money to their relatives, they buy the products from their relatives company, and at a very higher prices, uh, I mean, which with the prices elevated from what market prices are. This is one, we will cover that in detail. Another one is very high increase in CWIP. Okay, so what exactly is there? Suppose there is a company who has a fixed asset of say 1,000 crores. Suddenly, company is planning to do a capex 1,000 crores, 2,000 crores, 1,200 crores, double or increasing the capacity at a very high level can be at times bad for an investor. It may turn out to be good over a long period of time, but at least, for a short period of time, it may be not very exciting. Why it is so? Because CWIP is again one of the channel from which the money can be siphoned off. So CWIP, when it is too large, one needs to look at that cautiously. Okay. I mean, someone is asking how to check RPT, related party transaction. We will cover it today itself. So this is just a highlight, like what we will be doing. In detail, we will cover every part. Okay. So one CWIP, when it is very, very large, one has to be cautious. Okay. If that CWIP is, you know, uh, has a very strong tailwind going on, then probably you might see upside rally in the stock prices. The phenomenon is rare, but over a period of time, what I have observed with my 20 years experience is whenever there is a very large CWIP, the stock prices actually will go on a sideways. And if the tailwind is not there, then it will go, down also. I mean, one has to be very cautious when the CWIP is too large vis-a-vis to your fixed asset. We'll cover that in detail as well. Okay. Then, earlier in cash flow, when we were studying, we said that, okay, company, when it gets cash flow or there's a CFO breakout, that is a very good for the company. We've seen a lot of example when CFO was very, very large. Then we saw a big rally in the stocks, correct? But then if you see a cash sitting on the balance sheet for a very long period of time, if there is a cash and company is doing absolutely nothing with that cash, either it is into a bank account, either it has been, only for FD purpose or mutual fund purpose, nowadays companies to take it. These again are, for me, a red flag. I would not be investing in those companies. I mean, today I have invested in a company so that the company grows. I'm not investing into a company where the company is again buying a mutual fund and depending upon some other companies' growth. Correct. So this is a bad. I mean, I'll show you example. There are number of examples where the cash flow, where the company was sitting on a lot of cash and slowly, the promoters' mind change or whatever happened, they slowly took off the money from different angles. I'll show you what angles. Then, how to find a red flag is, the best way to find is cash flow versus PAT. So typically what one can do is take a cumulative PAT for 10 years and a cumulative. So cumulative PAT as in last 10 years ka PAT ko add kar do, just add the PAT of last 10 years and add a cash flow for last 10 years. This should be typically 70-80% tak hona chahiye. So if your PAT for say cumulative 10 years is 2,000 crores, okay, then your cumulative cash flow from operations, CFO basically, should be close to 70% of that. So basically 1,400, 1,500 should be there. If it is not, then probably you should be very clear that the money, whatever the sales the company is doing, that probably is not that healthy. Okay, either the money is getting stuck into inventories or it is getting stuck with the vendors. Okay, or basically, to whom we are selling. Okay. So this is again, a very important thing. We will, cover a few examples there as well. And so now if, so what happens in a business? So, I mean, just next point, significant increase in debtor days and inventory. Okay. So there are companies who are actually maybe dumping or showing the sales and dumping the money or, forcefully giving the stocks, or their whatever, whatever they manufacture, they are forcefully giving it to their suppliers. Okay. So what will happen is the sales will be there on the books, but the cash flow will not come. Okay. One, again, what will happen? When they are forcefully giving them, okay, but that I'm not getting the cash, your debtor days will increase. Correct. Simultaneously, if you have too much of a material or too much of product in hand, your inventory will also increase. So if both is happening, your debtor days are also increasing and the inventory is also increasing. Okay. Both put together, it's an orange or a red flag for me. One has to have a deep dive into a business, what business cycle is going through, because increase in both significant. I mean, just not increase for a day or two, a significant increase in debtor days, a significant increase in inventory is a red flag for me. Okay. And one important thing we'll check, that I mean, to be, you will be surprised. there are some very fancy names in the stock market where people were going gungo, the stock prices were going up for 1 year, 1.5 year, but the company was actually not able to pay its debt, or the interest payment was also not being paid to the bank, and it was twice or thrice written in the annual report that the company has defaulted. Twice it appeared in the annual report that the company has defaulted. Still, the stock prices were going up. It is a famous Twitter stock. Also, we will discuss that stock as well, and giving you a very simple check and balances how and where you can check simply that the company is making some fraud. So let's go one by one. So let's start with say this. So we have done this earlier. I think we'll go with examples so that it becomes clear for you. So let's do this example. Let's understand the business of quality, Dodla Dairy, Hudson Agro, and Parag Meal, and we'll also understand what how it worked, and also we'll compare the two stocks, demand and future retail, so that you'll understand how important your cash flow, data days, and everything is. So just opening Quality Limited over here and going on ratios. So if you know quality is into dairy business, no other business in dairy is able to have it can have a debtor days which is more than 2 or 5. Okay. Whereas your quality has a debtor days of around 100. Okay. Here only the company actually had defaulted. Look at the Hudson Agro. Okay, 1 second. Hudson Agro. Its ratios, it has a data days of only 1 or in fact 0. Correct. So the company which is into a dairy business cannot afford to have a data days of 70, 80, 100 kind of. Correct. And also if you compare the cash flows over here, just a cumulative cash flow, just taking just a simple thing. If just try to find what is the total what comes. So if you just do that, okay, so leaving this TTM, okay, 200, suppose 200, 150, 200, 5, 6, 7, 8, 9, 10, 11. So roughly 1200 rupee, 1200. Okay. And if you just add the cash flows over here, correct. So you'll get higher than that. Correct. So the cash flow is significantly there. Similarly, if I just calculate the cash flow of quality, okay, now look at this. The cash flow has been negative for a while. So if you add all this, minus 600, minus 80, so 200, 300, and all the 300 is gone off. So if you just do a cumulative cash flow from operations and you do a cumulative cash of, PAT, the PAT has been significantly there. Correct. I mean, ignore this period because still till here only the fraud was out. Okay. So if you had cumulatively that did this, the company was showing you consistently growth in their profits. Correct. But do you see the cash was never coming into the business? Whereas, sometimes you may also question was if it is an infrastructure company and all. So that is why I'm taking an example that is comparison with peer to peer, apple to apple, basically. So basically, one company who's having a good company in that particular sector is showing you a clear cut cash flow generation. Another company having a negative cash flow for 5 years altogether, whereas it is consistently showing you that the the profit was there. So one who only looks at the cash flow and says that boss PAT to बढ़ रहा है, PAT is increasing by 20, 30, 40%, EPSs are going up, the stock prices will go up, but you will understand finally that if the cash is not coming in, if the cash is not coming in, then probably company may land into trouble later or sooner. Okay. And that is why we always wait for the cash flow breakout to come. And also we check whether comparatively what company has been doing in the past. Okay. Look at this example of similar example of DMart. Look at this ratios. Okay. Debtor is fine. Debtor is 1 days. Can I look at the inventory days? The inventory gets off in 30, 35 days. Correct. And if you see the cash flows, look at the cash flows. Correct. 2000, 2000, 13, 13, 12. Just look at the, pad. Again, similar you will find 2000, 2000, 13,000, 13, 1400, 1000. So entire net flow, whatever it is coming. So look at this 13, 1, 11, 15, 23, 25. Similarly, you will see on the cash flow statement, similar amount is getting converted. Correct. And the inventory days, what we just saw is just 30 days. Compare that by future retail. Look at the inventories. the 30 days inventory, and here it is an inventory of 100, 200 odd days, correct? So, surprisingly, very difficult times for them. And look at the cash flow from operations. If you do a cumulative minus, 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 so this plus and minus gets nullified over here. So for last 5, 6 years, for this, if you cumulatively do, so here the fraud somewhere was out. But if you add this all, okay, you will come to a conclusion that they never made, cash flow in their books. So cumulative. So whenever you do a check, okay, this is very important. At least from last 5, 7 years, whatever you see, generally I take 10 years. So in 10 years, if company is unable to generate a free cash flow, or they are unable to convert their net profit to cash flows, then the company may sooner or later may land into a trouble. Okay, so this is one. Similarly, you know so if there is the things we discussed, significant increase in debtor days. So for example, debtor days where 30, 25, 1 month cycle is going around with the debtor, it is fine. But if you see a significant increase, if from 30 days to 80, 90, 100 days, if the debtor days goes, it simply says that whomever you are supplying, it's not giving you money. Take it, there is some significant problem over there. Still, it could be a business change. One has to accept that. Every change in data days is not bad, but then significant increase of 2x, 1.5x, it's a questionable thing. Plus, if simultaneously you see an increase in inventory also happening, so both, in case both, that is, I mean, this point. So increase in both debtor increase and inventory stocking happening. So either there is a huge competition which has come, or the market has become obsolete. So you are just giving the stock to someone, show the sales, but whoever is taking is not giving you money, and plus you have inventory also on your books. It's very difficult. So generally what happens is H1 and H2. These are the two times. Okay, when the company have to compulsory give you the cash flow statement. So it is very important. I mean, I track very closely the companies report when they come in H1 and H2. So basically September, April, May, June, July, August, September का जो end का जो report आता है, that is very important. You have to close that, track that very closely. I'll give you one example. How actually I had this business with me, and I sold it off just looking at this particular thing. So I'll just show it to you. So this is a company called as Solara Active Pharma. Okay, and if you see I mean, nothing, you will not see anything. So let's go to the P&L first. Okay. So do you see, operating profit margins or operating profits going up? Correct. Healthy way. Operating profit margins also going up. Till here, it was extremely looking good. Correct. Nothing bad on the P&L front. If you see the net profit, so your net profits 59, 115, 220, everything going up. So everything is looking good because the company is growing by, say 100% kind of. So 60 ka 120 approximately, and again 115 ka 220. The company is growing by 100%. So this is extremely good as per the P&L is concerned. Similarly, if you see the company is getting the cash flows also. So again, good thing. Till here, whatever we have studied in forensic, things are looking good, correct? Then, I'll just go to the this particular PNL. This is 30 crores positive. So till now, September 21, everything is good. Here the problem occurred, correct? Now let's, if one have gone a deep dive, which is very important to go whenever the September results are there, and just go to the cash flow. I'll just zoom it, don't worry. So this is the cash flow, consolidated cash flow statement of Solara Active Pharma in the month of September 21. Over here, what we are able to see is that inventories, what you see, inventories minus 200. Okay, so there are a lot of money out of this 173 cash flow that they had. In that also they had 200 crores ka negative inventories. So your cash flow or the entire money has stuck into inventories. Okay, and look at this trade receivables of again 200 plus, correct? So because of these two, your inventories and your trade receivables, They both have gone negative because of your cash generated from operations. CFO has completely turned to be negative. The another reason for is both inventories and trade receivables. Okay, for me it is a very big thing. I mean, I will definitely have at least a stop loss placed in my system when I look at this. Okay, at least I will have some kind of, either I will reduce the position partially or whatever, but I definitely will have some technical SL in place, because this two things simultaneously going up. I'm not saying that okay, immediately the management is bad, cheat and fraud and everything. I'm not saying that, but for me the stock will definitely become a non-performer, and that is why I at least will have reduction in position. I'll move to some other stock, or at least if I'm in love with the company, so at least I'll have some stop losses in place. Okay, now just look after this September 21, what happened with the stock. Suppose that they showed continuous 4 quarters as a negative. In this period, December, or in March, I guess, in December, yes, in December, the CFO left after this results. And in March, I guess the CEO also left. All of them resigned. Now the company is rebuilding, reinitiating. And if you would have, I mean, you can check at your end. If you will go and read the con calls during this period, December and March, they are still talking about the inventories that they have of COVID. Okay, I mean, December end, and they are sitting with the inventory which they had built in for COVID, correct? For you and me as an investor, we have an option to exit the stock and go to a better stock, correct? In fact, the CEO is also leaving. So after this, if you see the charts, post March, what happened in the stock? So September we were talking, okay, we were here somewhere. Okay, actually I had exited it somewhere around 1200 odd, I guess, because this is here when I read that report, and I placed my stop loss. So here somewhere I exited, okay, close to 1200 odd, correct. And after that the stock had gone to 200. Now there are things of new CEO has come, new CFO has come, revival talks are going on. Different story. Today's topic is basically, you know, whenever you see, I mean, this particular line item, which I'm again repeating, whenever you see a debtor increase significantly or a stock inventory significantly, okay, because of, and both happening simultaneously, it is something which is bigger problem that you and I are unable to identify. At least have stop losses in place. So very, I mean, not saying again a cheat as a company, but then yeah, company is going to some trouble times. Okay. Okay, let's go to one more example on the similar line. Vinati Organics. Again, great name, great stock. Take a great management, nothing bad over there. But just look what is happening over there. Okay, just look at this ratios. Okay, debtor days, which were always 60, 70, 80, that's fine. Correct. Significantly, it is from 70, immediately it has gone down to 106 plus. Okay. Inventory, which was 30, 40, 50. Correct. Now what has happened, it is again gone down to 115. Correct. Some problem here. Some problem here. This is March. Okay. And if you just check again the September period, half yearly wala, which I was telling you just before, going to the quarter side. Okay. Just give me a second. Yeah. Going to the consolidated one. Just give me a second. Okay. I'll zoom it. Look what has happened. Trade receivables. Look at the size of trade receivable jump. Negative from positive to negative 7233. This is in lakhs, so 773 crores. Okay. And at that time, the balance sheet was not that large. So your profit was 2000 and your money is getting stuck at 7000. Look at the inventories. So 4,000 lakhs, 7,000 lakhs. And what is the total size that what is the total size is not even 20,000. So entire money, majority of the chunk of your money is again the two things. Money is getting stuck, cash is getting stuck into inventory, cash is getting stuck into trade receivable, your debtor days are going up significantly. I'm not saying it's a fraud, but for me, it's a red flag. For me, I would not be investing into this company irrespectively. So look at this, what has happened in the stock after that. Not fallen down, not gone as a crash, but post here, September 21, somewhere over here. Yeah. Yeah. Post that, stock has given you absolute zero return for 3.5 years or 3 years typically, where the market has gone up significantly. Had you been investing into Vinati Organics, look what has happened. You're on a negative, or probably relatively. I mean, investing into Nifty would have given you return, but not in Vinati Organics, which is the mid cap company. Correct. So I think these are the few things which are very critical. One should observe. Either the company is going. I mean, this is very very much clear that the company is going from a very critical times. Okay. Deep diving further probably can also tell you that whether the company is going through a fraud or not. Okay, at least have stop losses in place. This is what I'm trying to tell you. Okay, this BCG group, I'll come to there. I'll have this example. Just give me a second. So this was a very famous stock for a while. It was Brightcom Group. It was uh, being discussed largely on Twitter and everything. So just when I heard the name of the stock for the first time, and look what has happened in the stock. Okay, but this period in when it became famous, it was somewhere in 2021, 22, when it was very famous. And will you just go straight away to the balance sheet annual report, say 2020. Okay, let me just check when there was a let me check. It was a little earlier problem. Just 1 second, when it was having a debt. Borrowings are there. So let me just wait. 77 crores borrowing, 2018 it is. So we'll go to the annual report of 2018. Okay. We'll just open the annual report of 2018. Now, very important thing to check, whenever I buy a stock, this is a habit for me that I'll always go and just read one pager, which is written by your independent auditor's report. That is also known as your annexure, EXURE, annexure A it is. Okay. Just type, go to annexure A. Okay. This is annexure B. Just going to annexure A. Independent auditor. Over there. Okay, this is 1 second. All right. So this is annexure A of auditor report. It's a habit for me to read this few line items whenever I invest into a company. Okay, now just look over here. Just let me zoom it a bit. In our opinion, and according to the information explained, given to us with respect to the repayment of due to the banks of financial institutions, Canara Bank, Axis Bank, State Bank India, the company has defaulted in the repayment of principal amount. Saw was the debt on the borrowing of the company, and 9.31 crores towards interest. The company has become defaulter. It is unable to pay this part. All the loans are becoming an NPA. The company is not paying interest. It is in 2018. Let's go to 2019. Okay, let me close this. Let's go to 2019. Again, and just don't have to read the entire annual report. Just few line items which are very important. You have to just control if that's it. I'll just put defaulted. You'll also get that. Look at this. The company has defaulted in repayment to bank and Canara Bank 31st March 2019, amounting 71.5 crores, and the loans where the company is actually defaulted. It's a defaulter company. It is unable to pay any of its dues to the company. 19. Okay. And was saying it is not a good company, and they were like, because of you, we lost a big rally. I don't know, this was here. I mean, the company is actually a defaulter. Why would you actually go and buy such kind of a stocks which has been always defaulted? There are so many, we have a time limitation. There are so many checks. It's a case study. In fact, yeah, what I'll do is I have one PDF ready of BCG Group, which I actually made in 2021-22 annual report. After reading 21-22 annual report, I'll show you that there are so many checks and frauds in this company. It's just a classic case study. I'll send that. Here also there has been issues 21-22 also. Okay, I'll share that. I mean, you would be understand it further better. Okay, let's go ahead. High cash. Okay, whenever there is very high cash in the books of account, okay, then it's a red flag for me. Okay, I need to know very clearly what the management is going to do of that cash. Okay, so I mean, now it looks like hindsight, but if you just look at the Satyam, okay, I mean, at that time even I was not this. I didn't know much. Look at this asset of the company. This entire assets that you are seeing, okay, a company has a cash of what? I mean, this were kept into a bank as an FD, and I mean, what is the FD doing? I mean, we are here to invest in the company, not. I mean, the company is keeping a cash of 3,000 odd crores in the bank. I mean, I don't know why. I mean, look at the PNL of this PNL. I mean, it didn't even had that kind of a PNL. But I mean, the company is making 1,000 odd crores and the company is having 3,000 odd crores cash equivalent into bank FD. The reason is, why don't you just pay it off? I mean, too much of a cash for a long period of time. It's a mess. I'll show you one more example in this. I mean, this is too old an example, but then, I mean, a smart investor carried away because of this. Lil, I don't know how many of you have heard about this, but I mean, great investor, Porinju, who invested in this company for earlier 4%, 5%. What this company did, it is into electricals and everything. It sold it part of its company to I think Havels. Okay, this basically Lloyd is what this company had, and they sold this business of Lloyd to Havels, and in return they got, I think, 1,300 odd crores. Okay, and this 1,300 odd crores was lying in the cash of the account. Correct. Porinju further invested because the company is having. I mean, the stock was available at the market cap lower than what cash it had in the bank account. Extremely good thing, नहीं? For an investor कि boss market capital कम है, cash ज़्यादा है. But then, I mean, we are not investing for a cash, correct? So, I mean, this. Just give me a second. Little slow. Just hold on. Yeah. I'm just coming exactly to the what thing I want you to read. It's too much over here. Yeah. Okay. Porinju Valiant said that he had invested in Lul on behalf of investor, taking into account that the company had received 1550 cash from the sales of consumer division to Havels and was trading at 1,000 crore market capital. Correct. And had a good long-term opportunity looking at the track record and the sold the brand Lloyd. Correct. So he was sitting on this company. Finally, what company did? I mean, too much of a cash for a long period of time is again, a thing that one should very be spectacle of what this company did. I'll show you that. Okay, so that's coming on the reel here. What this company did is, I'll just show it to you. Okay, cash flow. Just give me a second. We have that over here. Financial annual reports. In this related party, I'll just show it to you. Someone was asking me related party transaction कैसे देखते हैं. Okay. So again, annual report, just click related party, control F related party, and you will get all the related party transaction. I'll just show it to you how to read them. Okay. So first thing first, I mean, one who doesn't know exactly what related party is all about, company gives this disclosure. This, the whole fully owned subsidiaries are still fine. I mean, they have to open some subsidiaries in, because of regulations and everything. So 100% subsidiaries are fine. Okay, this is all okay. Okay, this again are the promoters of the company. This is also fine. But then enterprises owned or significantly influenced by key managerial persons or their relatives, whenever you do a large transaction in this particular segment or this particular names, then you have to be very cautious. Okay, just let me plug in the charger once. All right. So whenever you do any transaction with this enterprises owned or significantly influenced by key managerial persons or their relatives, you have to be very spectacle over here. All right. So what related party transaction this company was doing. Let me show it to you. So okay, fair enough. So look at this. The company was purchasing the goods from related party. Okay, Federal Lloyd Corporation Limited, which 71 security deposit. They gave a security deposit to them, 61 crores. Still fine. Now look at this. I mean, this is very important. Capital work in process. You are putting your money in your relative friend company or whatever company. CWIPs. How much? 62 crores. Okay. One. Again, Himalayan Mineral Waters, CWIP, 120 crores. Fedra IT Technology Capital, CWIP, 60 crores. So look at this, 60, 120, 60. Again, subsidiary companies are fine, but then this is the large amounts. Again, there's 16 more. Correct. So 60, 60, 120, 240, 250, 250 odd crores. You're putting that money into your own companies. So you have received the cash. It is a cash of an also this minority shareholder has something to say. I mean, this is how they siphon off the entire money. So this is 2018. Post that the company, I mean, after that, because it was highlighted by Porunju and everything. So I mean, still, I mean, they got caught and everything. But I mean, if some large investor would have not invested, this company could have taken away so much of a money from the shareholders. I mean, today also it has taken only. But then this is very important to check related party transaction. One more example I'll just share. Again, this is very very good classic example. Okay, I mean, you'll enjoy this. So look at this particular stock and this particular news. Okay, HIM Group to acquire 55% stake in auto component maker Gujarat Automotive for 21 crores. So HIM Group to acquire, actually it acquired a stock of Gujarat Automotive for 21 crores. Okay, and when is this? This was in 2013. I'm taking you back, so that means just starting off, the fraud. I'm basically how the fraud actually starts. Okay, so just going to here. Just give me a second. I'll just close all this first. All right, fair enough. Okay, HIM. Him Technocraft. Okay, just looking at the balance sheet and the cash flows. Okay, let's go 2013. We'll go here straight away from here. Okay, so here the company was doing an operating profit of 6 crores, small company. Okay, after paying the tax, they were making a profit of 4 crores. 2013, 14, they were making a profit of 5 crores. Again, they made a profit of 5 crores and 5 crores. Okay, small company making a decent flat profit of 5 crores every year. And look at the cash flows. Similarly, 4 crores, they were able to make the cash flows also. Fine. A small company making small profits, fine. Here they entered June, somewhere 23, they entered. So 2014 was the first year when the new promoter, Kim Technocraft, had come in. Okay. After that, what happened? See, suddenly there was a bonding in the company. So earlier, 13, 14, the company was a debt-free company. A company who's making a profit of 4, 4, 5 crores, entire cash flow is coming to them. 4 crore का profit किया, 4 crore का cash आ गया. फिर 4 करोड़ का प्रॉफिट किया, 4 करोड़ का कैश आ गया. This 7 crores of borrowings came in. And where did the borrowing go? The borrowing did not go into fixed assets because the fixed assets are absolute same, correct? Fixed assets are same. CWIP भी नहीं किया, investment भी नहीं किया. Some other assets came into play. Correct? This some other assets have come into play over here. Now, what is this? What is this? Some other assets have come over here. Some other asset of 7 crores addition. 12 crores and 21 crores of some other assets have come into the company. So I'll just open 2013-14 ka annual report. It will look weird because at that time, this is how the annual reports were made. All right. Okay. So look at this. The loan terms and advances. Company actually had taken a loan that we just saw. 7 crore का borrowings आ गया, correct? So you're able to see यहाँ पे 10 crore का कुछ borrowing आया है without tangible assets. So the borrowings have increased in the company, and where this money has actually gone, because no assets have increased. Fixed assets तो बढ़ा नहीं है. I'll just show you to where that money has gone. Look at this. The cash, where that cash go? Okay, the other assets that you are seeing, other, correct? This is inter-corporate deposits given. 9 crore inter-corporate deposits were given. And again, if you deep dive and understand line items, which is over here, you will understand that this money is actually going to the same promoter via inter-deposit corporate. And this doesn't happen just one time. Okay, I mean, I'll just show you to you simpler format also. It is not always very correct details are here because sometimes line items go missing. But if you just check ICD, inter corporate deposits, 9 crores they had given. Correct? And it was not the end. Again, the receivable, again, the same company was given more loans, more loans. You know, I just let me open 2015 also for you. Okay. Just give me a second because this is the older format. Control F doesn't work over here. We are looking at the statement of 2014-15 now. Look at this. Loan and term loans. Earlier, the loans were 11. Now it has become 19. More loans were taken. And more loans taken for what? For what? For what? Again, I'll show you to you. Okay. So inter deposits again given. Pehle 9 diya, more 8 were given. So this entire money, okay, it is being actually given to the old promoters. So this I mean, a company which is generating such a good cash flow, you are not increasing. But this, this, look at the borrowings. I mean, a cash rich company they purchase who is generating a cash flow for 21 odd crores. I mean, today they are only using it for sniping of the money of investors. Okay. So the borrowings were completely increasing. These borrowings for this large period of time never came into CWIP. For the first time, they took some assets over here. But till then, I mean, the stock prices from 13-14, if you see, have never given you any kind of a return. Completely avoid this kind. I mean, this showed you, how this dirty dirt, I mean, dirt begins basically. So, should be very clear in your mind that ye company ko avoid karna chahiye. You should never buy such kind of a companies. All right. So this was him. So today, if you go to related party transaction, you will understand. So that was a very old format. Today it has become simpler. Control F, related party transaction. You will able to see that in under related party transaction, this company is giving inter-corporate loans to another corporates, and for no reason, being the same promoter who's taking the loan in this particular company and giving it to himself. And why they are doing so? Because this company will pay the interest, the promoter will enjoy the money. As simple as that. Correct? So, very large CWIPs. I'll just give you one or two examples over there. I think I've already given, but then some companies where CWIP is I mean good companies. I'm giving you an example of good companies. For example, look at this SRF. Okay, nothing bad with the company, but as an investor, you should always be spectacle when you see that. I mean, this is still smaller. Okay, fixed asset of 10,000, and this company is doing 2,000 ka CWIP, still the stock prices are actually going from a sideways kind of a territory. I'll give you a few more examples over here. Just give me a second. All right. SRF. Look at this. Acha, okay. But again, a very Gango kind of a stock. Yasho Industries. I mean, quite a few know what who are in the company. But look what is happening in the company. A company whose fixed asset is 170 today is having a CWIP of 124. Since this has happened March 23, large CWIP has happened, and this CWIP, mind you, has come from the borrowings. The borrowings have increased. The borrowings have increased. CWIP has increased. I'm not saying that the promoters are fraud, but as an investor will be very cautious in this, because this can be a channel of taking of the money. No claims as in fraud or not. But then one thing is clear, that I will be very skeptical in this particular company. And look what has happened over 1 year. The chart has the stock actually has gone nowhere. Correct. Because what I mean, everyone will wait for market to give you or the I mean, everyone will wait for the stocks to show you the increase in sales, increase in cash flow, a reduction in small kind of a debt. Only then the stocks will become excellent. I mean, tomorrow's speakers again. Uh, okay. Let me give you one more example in this. Okay. ISGEC, ICJEC. Look what happened over here. Again, the balance sheet. Fixed assets, look at the fixed assets, 500, 600 ka, यहाँ पे look at March 2020 or 2021, 800 crores, 900 crores. Your CWIP is higher than the fixed assets, correct? I mean, today also they are doing large capex. I don't know what they are doing. I have not gone detail, but then one thing I can tell you, this particular period, the borrowings gone up from 300 to 900. This 600 odd crores ka borrowing आया, 700 odd crores का borrowing आया. It was entirely for CWIP. From this particular period to this particular period, let me tell you, I would be very skeptical कि क्या होता है. I don't know. I mean, tomorrow product can become obsolete. Some competition may arrive. I mean, very difficult for an investor, retail investor, to track so closely. But then, only after this has become, or in fact, if you three, mid of September 23, okay, this stocks become interesting because your borrowings gone down significantly. Okay, if you see the mid uh, H2 of this particular company, ICJEC, you will find huge cash flows coming into play. This is March 24 ka ending. But after 23, in the mid of September ka, if you open the cash flow statement, you will understand this company is actually now doing, I mean, the turnaround has happened. Cash flows have started coming in. Profitability has increased. Now the things are turning around for them. So if I just open, I'll just open it for you. September 23 over here. If I just open this cash flow, what which is just earlier also. Statement, okay. So look at this cash flow from operations. Earlier it was what? Minus. Now it is significantly increase in cash flow from operations, correct? So, I mean, whatever the payment was remaining, that has started coming in very, very quickly. This is where my skepticism on the stock, which has done a very large CWIP, might come to an end. And if you see the chart prices also, okay, so for year, if you see, okay, let's take 5 years. This particular period, when it did very large CWIP, probably it never performed. This particular entire period of 21 to 23, it never performed. Correct. In fact, September, somewhere over here, I might get interested. Over here, I might get interested because your cash flow has started coming in. Technically, if you see, I mean, there is a multi-year breakout which has happened, cup and handle formation. I know, however, you look at it technically, but this is where I would be now interested. I mean, someone who would have seen only CWIP company going will always go from a large consolidation only if there is no, I mean, significant tailwind happening. Only then, I mean, today, if you see example of SJVN doing very large CWIP, but then that particular sector is currently into a very large tailwind. For a small period of time, it may outperform. For over a long period of time, again, I will be skeptical. Correct. I think this is an example where the company does very large CWIP versus what fixed assets they have. Cool. I think yeah, we have covered a lot. Cash flows we have covered, PAT we have covered, significant increase in reserve, we have covered, how to check RWP, related party transaction. Okay, one particular stock in related party transaction, I'll just cover that and will be the last example for the day. People are want to join now. Yeah, extremely happy. I mean, strange. Garware High Tech, if you see, this company again has a significant problem with the related party transaction. Very significant problem with the related party transaction from last 4 5 years now. I never invested in this business, but now I am getting interested because, irrespective of related party transaction, which has been for a large period of time now, the company is actually has become a debt free company. So this 20 whatever you're seeing is again a lease का है वो lease liability है. The company has now become a debt free company. When a company becomes debt free, okay, for the promoters, uh, there is not too much to loot the company as such. I mean, they would not be very interested, or the effort, putting the effort of doing a forensic or siphoning of the money becomes very less, because they are the final owners of the company now, and they have to pay to no one, and they're holding 60% of the stocks. So I think now this particular company has become interested, but I just for the sake of example, I'll just show you to you how to see related party transaction in this. So related party transactions. Okay. So these are the companies. Okay, these are the key managers. That is fine. The executive directors are fine. Entities in which some of the directors are interested. Now, this is a very important thing, and you have to check for these companies if there is any large transaction which is happening. Okay. So if you see again, the name is, look at this name, Garware Industries with double E. Okay. Now this is very difficult. I mean, why this they have kept the name? But let's just check what related party transaction the company is doing with this entity, Garware Industries with double E. Okay, let's check that. Okay, so okay, now look at this here. Garware Industries Private Limited, the entities in the director we just saw. It, I mean, look at the related party transactions worth over here. It is 43 crores. And look at the, I mean, look at what is the PAT that the company generates. So out of the PAT that they generate, which is roughly, just give me a second. A PAT that company did in 2023 was 166. Out of this 43 crores, or in fact this 43 crores, so it's basically 23-24% is going over here in Garware. I mean, over here Garware High Tech Film is still a step down subsidiary. I can still give a benefit of doubt, but here the promoters are taking the money. I mean, they have been doing this for years now. I never was interested in this company, but now this particular things can change, and the company has now become debt free for them. This could be some of the another reason, but then I guess one should be typically cautious when you look at the related party transactions. And if the company's borrowings are increasing, money is getting stuck into inventory, money is getting stuck into debtors, all the two or three things happening simultaneously, it's again a red flag. So one has to be very cautious. I think yeah, it's almost 5. We will stop here. I think a lot of examples we did. Um sure, and any doubts you have, you can always put it on the chat. I'll open it for tonight, and I'll give you the replies. If I mean, please post. Don't I mean post any queries on stocks and everything. If you have any doubts on what we studied today, then probably you can ask. And one more special announcement which I actually wanted to make is, I'll just take 1 minute. There would be one weekend batch that I would be taking Saturday, Sunday, for 3 hours kind of. It would be a techno funda, how to find a stock technically and fundamentally, do a techno funda analysis. This would be a paid one, but then you don't have to pay me. So God has been kind on me. So what I require is to you to do a donation on whatever charity you trust. Do it into a hospital. Do it into a mythologically whatever temple you want to do. You want to do it to any anath ashram, poor people, whatever, just I'll make an announcement on the chat as well. 3 or 4 thousand rupees of donation you do. Uh, do ensure that if you're already doing some donation, this is not a part of that. This is up and above which I am asking you to do it. If you do that, yeah, I will invite you to join that particular batch of weekend batch that I would be doing on Techno Funda. It would be with how to find stocks, how to till how long to hold them. Okay, and what are the tailwinds, how to find the stock, how to find it technically, fundamentally, how do a combination. I mean, how exactly I do my own analysis is what I will be trying to cover in those 6 hours, 3 hours on Saturday, 3 hours on Sunday. And that particular batch will I keep an open forum for asking any queries, doubts, and everything. So that will be doing it into the first week of August. First week of August, Saturday, Sunday, I will be keeping that batch. I will put that link to you. Not required money. Only you have to do is a donation up and above whatever donations you are doing. Whatever, I mean, amount is also not that significant. 3,000, 4,000 donations, whatever you want to do it. Send me the receipt of that and I'll add it to the batch. Perfect. I think it's five. Thank you for joining in. Do send your comments uh, on the group and I would be available over there. Yeah, for that paid batch, recordings will be available for 1 month. Okay. Perfect. Thanks. Bye.